because they'll be the first big test of what the other side of QE is supposed to be telegraphing. Growth really doesn't happen across the European theater unless we get some sort of fiscal reforms that really have been lacking to date. And when we look at the Greece picture, we've got a situation where it looks like the populace is pretty much tired of the situation they've had. And so it will be very interesting to see how this debate plays out, because certainly volatility is one of the things I think you can count on across all of these theaters. It's been the big theme so far this year. It's been some of the things that we've been very, very focused on. But I think until we get some sort of true reform and pro-growth reform across Europe, where they are much more competitive, QE will just be another one of these episodes that really will not create long-term growth and profitability. And so you got to wonder about what happens with the economies in the long term.
Mark, this is going to be a very, very big week indeed. I mean, the ECB actually impressed some people with a slightly bigger than expected dose of their own version of quantitative easing last week. The Federal Reserve is going to speak this time. It's the first time since that big ECB move, so we'll get some sense of where they're heading. And we've got 140-plus companies, including Microsoft, Apple, this week. It's interesting the tech earnings are running at 3 times the steam of the overall market. So how are you playing all these themes?
So we're incredibly excited. There's 3 basic themes that you can play in a market like this. One would be credit. Credit has certainly widened and gotten much more attractive across the U.S. And when you think about what's going on in the EU with quantitative easing and the negative yields and the compression of all of that, at a time when really the average investor in Europe doesn't have a whole lot of stocks. They've got a lot of bonds. So they're going to be looking for more yield. We think that's really, really positive for U.S. credit assets, which have been widening in here. I wouldn't be surprised if we see active managers within the space in loans and high yield making 8 to 10% returns in the next year. So that's a big positive. But your other point about earnings is also, and the Fed are critically important now, because we were worried about a big surprise in Europe. We didn't get that. That's nice. Right after the Swiss bank surprise, which was certainly unsettling. So as we think about earnings now, it comes down to being active, playing volatility, understanding winners and losers. And there's some great winners and certainly some losers to be very focused on. And I think that active management really is the big theme around volatility. For example, if we think about airlines, they're a big beneficiary of what oil has done, but it takes a while. There's a big lag. Take American Airlines, for example. Their average oil price that they experienced last year was about $80. Well, right now, it's much lower than that. As that sinks into the numbers, every dollar of oil is worth $100 billion for them. So that's a big move.